So give us your top 3 pieces of advice for independent pharmacy in 2024.
Well, same thing we always talk about. Number one is always going to be fundamental accounting. You got to have the fundamentals in place. You have to know what you're doing. You got to know what your pharmacy's doing. If you've got good, solid fundamentals, you can use that as an asset in your pharmacy. Mm-hmm. We still see a lot of pharmacies that just don't have that. And then they're wondering, how am I doing? I'm paying too much tax. I don't know what's going on.
Yep.
Can't have that. The margin of error in a pharmacy is too thin to operate like that. So, fundamental accounting, always number one. Number two, let's see, top 3 things. I guess tax planning. There's always opportunity for tax planning. We see a lot of retirement plan opportunities in a pharmacy. Mm-hmm. Pharmacies with a simple IRA or something like that. I mean, there's some really strong retirement plans a pharmacy can put into place. A lot of pharmacies say, hey, I'm looking to retire and my pharmacy's my retirement when I sell it. Well, there's opportunities where you can not only have your pharmacy be a funding for your retirement, but also you can get these plans in place to really fund a retirement account with big dollars, reduce taxable income, and give you a nice nest egg when you do retire and sell your pharmacy. So there's a lot of retirement plan opportunities out there for some pharmacy owners. I guess it remains to be seen about buying and selling this year, what the M&A activity is going to be like. If there are opportunities, which I'm sure there will be, there's a lot of tax planning tools you can use to maximize those opportunities for pharmacy owners. It's not just simple as asset purchase, stock purchase. You can go into a whole host of tax elections that allow you to get the best of both worlds and maximize your tax advantages, your cash flow involved with all that. So there's a lot of opportunity on the tax planning side with buying a pharmacy or selling a pharmacy. And then cash flow, just be managing that cash flow. And that all goes back to the point number 1, fundamental accounting.
Okay, you said something interesting that spun a bunch of different questions off in my head. But I guess the number 1 and the common problem that I see is they don't think about the full plan. They just think about, I'm opening a pharmacy, I'm getting through these goals. They set goals and they go, cool, I've saved up the money, I've got the robot, I've put aside this money, I've done this next thing. When would you say or recommend that a pharmacy should start thinking about the retirement plan? Because a lot of, to me, the retirement plan thinks about all of the stuff that you're doing in between then to grow your business so you can say, cool, this day I plan to exit.
Mm-hmm. Yeah, so, a standard pharmacy that has debt, you typically a 401k plan with a safe harbor and a profit sharing component, which is a discretionary thing. You don't have to fund that profit sharing every year.
Yeah. Usually
that's a good start for a pharmacy. A simple IRA is not. The funding for the owner is not there. But the 401k, you can put more funds into it. And, and then if you're a mature pharmacy with a very solid balance sheet, not a lot of debt, very profitable, you can look into some pension type plans for those pharmacies, where you can put up to several $100,000 into these plans, and offset, it's a deduction at the pharmacy level, reducing taxable income, but you're moving that money into some qualified retirement plans. And we're talking big dollars. So you got to have the right planning in place. You have to work with the right professionals, obviously here. But there's some opportunities there for those more mature pharmacies, older pharmacies.
What would you say is a realistic, the shortest timeline that would be manageable? Because everything you said is 5 years.
That is a 5-year thing. So if you're going to do something like that, you have to do it for at least 5 years. That's pretty much a requirement. And which is great because, you get a 60-year-old pharmacy owner, 65, who's paid off all their debt. They're just a very profitable, solid pharmacy. They don't really have a retirement plan, maybe a little 401k. And they're profitable and they have tax problems. Well, you're like, hey, if you got 5 more years here, we can you can load up a retirement plan, reduce that taxable income, and build a $1 million nest egg plus in 5 years, and then we can sell your pharmacy.
But if a pharmacist, so what I hear you saying is that the best thing, at least what I would do based off your recommendation, is, hey, I'm 50, I'm wanting to think about the retirement plan so I can retire at 60. Let's start working towards that path, and then set a goal of what my money is going to be.
Yeah, well, time value money.
Yeah, time value money.
The best place to start that plan is at 25.
Oh yeah, but not all people think like that.
Yeah, but so it's not, hey, how many years before? It's now.
Yes, it's now.
The answer to all of it is now.
Yep.
Yeah, but the surprising that I'm sure you run into, Scott, is that there's people that go, hey, I want to retire, and like you said, their books aren't amazing.
Yeah, but at this point, it's too late. The answer is now.
I know, but
it was yesterday.
Yes, it was yesterday.
It was. It's not a, hey, it's 5 years, and so you're 10 years away. Wait 5 years till you start.
Oh, I know that. But I mean, yes, it's always yesterday. Always plan for the worst yesterday.
And if it's now, and your plan is a year from now, your plan needs to extend.
Yes.
Yeah.
So there's opportunities in the retirement plan.
You should have been working with companies like Sykes,
right,
to be thinking about that plan.